All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market's just been a slow bleed the entire day here, but we're not seeing that in all stocks. We're seeing a lot of differentiation out there amongst sectors, amongst even stocks within sectors. It's a really interesting set out there today as we see some of this money rotation. We have bonds which have been selling off here. We had several bond auctions, and the demand for them was pretty light. So we have seen bonds continue to sell. And, some of that is that adjusting to what we heard from the Fed yesterday. Maybe, but it does look like more of a reaction to the bond market. And just the fact that at these rates, the demand isn't all that high. And, when we saw the Fed cut rates and get really cheap rates in the past, they had to step in and be buyers. They had to buy them at those rates. And, that was part of what quantitative easing was about. And, the Fed stepping in and being the buyer of, new bond issues. And, we're headed that direction. We're heading that direction. All the signs are there. We see it happening in the bond market right now, and it's going to be a very interesting time, and we're going to see some big pops and big drops ahead in the market in the 12 months to come. And that's the one certainty. That is the one certainty. Now, as far as the next pop drop, where things go, we're seeing a lot of stuff that bounced this morning. Had decent days, like Microsoft, had a pretty bad day yesterday. Was up decently here this morning, but really kind of just giving up its gains. Now, we're seeing a lot of that within the tech space. Not uncommon to see. And, again, as we talked about yesterday, these charts look a little bit suspect right here. Now, for the challenge, there are no new trade signals on the board. And I'm not too surprised by that. I was a little disappointed by it. I thought, a couple might have a shot. But I thought this afternoon I'd go through the watch list here with you again because things have changed since Friday and Monday. There are quite a few stocks that have changed and are a lot closer to signals than what they were last week or, Monday here. There are also some setups on the watch list that I really like. And while I like the setup, they're not a signal, so I can't go trade it. But, I'll show you kind of how I'm looking to trade them personally and, some of the risk-reward dynamics associated here with them. So I'm just going to come in. We'll start from the watch list, just start in alphabetical order here. Here's Alcoa. This is a very bullish style chart here. Where we have coming off of this low where it based for a little while. Now it has a higher low here in it. And it's the type of chart that tends to see a little more thrust. And I'd be looking in this 24.5 to 25 area to come into play here for Alcoa. As far as path of least resistance, it's not going to trigger a signal. The last 3-7 crossover was right back here. Needs a little bit more of a pullback to actually trigger. But, a very bullish kind of coming off the bottom type of chart. Today's open price is the stop point there for it if looking to play it. American Airlines. This is one where we saw the dip, right? We saw the dip, and we didn't get a bearish trigger on it. You'll notice the Stochh 39.1. We're trading up near the high side of the ranges. This is one where we just need a higher low to come in, and then, a 3-7 crossover. And we have a very interesting setup on a stock that we could easily see push into the upper 30s. And one that I'd like to play, hoping it gets there sooner than later. That way it gets there maybe before earnings, so it's not triggering the day before earnings. So at least we have some time to play it. But this is one where if it starts to get some upside, would be very close, but it doesn't have it yet. Then we have Apple. And there's another stock on the watch list that's very similar. It doesn't have a 3-7 crossover, on it here. It was trying to get some downside crossover. We talked about it yesterday. It wouldn't be a signal. But, here today, gapping up and pushing above yesterday's highs. This type of candle pattern right here, it's referred to as a kicking pattern. Now, oftentimes, a kicking pattern is more of a reversal pattern. We saw it right down here, where stock is selling off, has a bad day. The next day, stock gaps up and pushes above the high from the prior day. A very common bottoming pattern, one that we just see happen quite often. What we don't see happen is it, occur when we haven't had a hefty sell-off, right? And we're seeing this one happen after a little bit of flat. So the probabilities on it, the odds of it getting upside run are significantly less than what they are in this type of situation that we saw here at the beginning of June. But the setup is there, right? The setup is there. And what do I mean by that? The trade is very easy. Stop on today's open price, okay? So 197.77, right? The current stock is 199.52. So you have about a $2, $1.80, $2 stop point, okay? You go long. That's your stop point. That's your risk parameter. And if you're wrong, you get knocked out. It's a small loss depending on the option you chose, right? This isn't something where, I want to get, into a really super aggressive option. But oftentimes what we will see is that when they go, there's significant upside. It's not just a little bit, it's a lot of bit here on it. We saw it right back here. It wasn't a little bit of upside. It was a lot of bit of upside. So for $2 risk, basically, you have significant reward potential. You don't have the odds in your favor in a big way. This isn't something where you look and go, well, I have 70% chance of being right or 80% chance of being right. No, it's about a coin flip. If you go look over at some of the candlestick pattern data, it's about a coin flip. But in the market, a lot of the odds are coin flips. It's a matter of, okay, with this coin flip, do you have better risk reward? If you have good risk reward on a coin flip over time, they pay off nicely, right? The challenge, the challenge triggers, we're just over 50% of challenge triggers going to that 2 average true range, right? We don't need much more than that to do very well because it puts things in a very nice risk reward scenario. So this is one where it's not overwhelming odds, but it is a very solid risk reward setup with those coin flip odds. There's another stock we'll see. It's almost identical. You'll recognize it here. And then we have Amazon, just kind of getting that downside cross action coming in, but no signal there. We have Arconic, which has just been on fire. This is one that triggered for the challenge back here. Didn't go trade it because of what the options were. They weren't worth it at all. In fact, it may be one I have to pull off the watch list ultimately. But it continues to hit new highs here in a very bullish fashion. I don't think it's a great setup here today, but a decent price action. Boeing, this is the one I mentioned you'd recognize. This is the same concept as Apple. Right, the same exact concept. Yesterday, kind of a bad day. Today, gaps up and breaks above yesterday's high. Has that nice little kicking action here after a consolidation, and does suggest go higher. I'm on record. I do think Boeing goes to 400 ultimately here, and would not be surprised to see it take off and go. With that said, just be cautious because when this type of move doesn't work, right? it can pull back very aggressively, so you can't kind of fall asleep on it. Yes, it's a good risk-reward type setup. It's actually not as good as Apple, but it's one where, look, I mean, we saw the kicking pattern right back here. A bad day, next day gap up and go. It does look short-term overbought and all of that, but it's just something that, the reward potential is very high, and it's one of my favorite setups on the board out there with the move here today. On Boeing, I sure wish it had pulled back a little bit more and, had a bullish trigger to trade for the challenge, but, alas, it is what it is. Alibaba, not much here that's different from earlier. Bank of America, we've seen it pull back a little bit. The banks like J.P. Morgan, Bank of America, we haven't seen an upside crossover come into them. We've had a little bit of appreciation in the overall Stochs 39.1 element. It could potentially have a higher low that offers an upside setup. I was kind of surprised to see JP Morgan and Bank of America not trigger to the downside here this week on these downside 3-7 crossovers. But we really haven't seen much follow through. They've pretty much just kind of been stuck there since. Bristol Myers, we had the news here this week. He's going to need some time to shake all that out. Caterpillar just kind of keeps on going, just a little bit each and every day. No fresh 3-7 cross. This isn't going to trigger for quite some time. In fact, I would be surprised if we end up with a Caterpillar trade sometime before August or maybe even September, especially with where that chart is and with earnings upcoming. It could be a while. Chipotle, we've talked about this one, had the 3-7 crossover, kind of trying to come in yesterday, didn't trigger. We didn't get the trigger this morning. It's just kind of just stuck in this consolidation phase. It could trigger to the upside at any moment, but it's one I would rather see sell off down to 700 and then trigger to the upside. I think we'd have better odds there, but we'll see. ConocoPhillips shooting on up here. Some of these energy names very strong here today. We don't have fresh 3-7 crossovers on them. We didn't get signals on them coming off the lows, right here. We'd need to see a consolidation pullback, a higher low come in to have it. So Conoco, it's not going to trigger anytime soon. CSX, we saw a bullish trigger come in right here. Got whipsawed out the next day. Next day it popped, and then it just kind of had 2 bad days here this week and just kind of sitting, but no signal action there. Chevron here, not popping like a ConocoPhillips or some of the others, but you see the 3-7. It's just not close. A lot of these energy names aren't very close to triggering. Now, Delta, this one, American is close to triggering, right? It would need kind of a decent up day, and we get a bullish trigger. I was kind of hoping we'd see Delta sell off a little bit and then start to go, give a fresh 3-7 crossover, but you'll notice it's not really there, not even close there. Triple D, which essentially is off the watch list here. Disney, we've seen it dance around the 3 and the 7, up and down, all around. We got the bullish trigger at the beginning of the month. We traded that, and it's been pretty darn flat except for one day, since there for Disney. EOG Resources, just like the other energy names, nothing much in it. Facebook, pulling on back a little bit today. This is one I'd love to see a pullback, maybe to even 180, and then start to rebound, give us a fresh 3-7 crossover and go. We didn't get a bullish signal on this 3-7 crossover as the stock had gone towards a new low, new short-term low. Would love to kind of see a trigger come in and be able to play that, but it's not there. Freeport, kind of same thing, not very close. So, while yes, there are some getting a little closer, like in American Airlines, we still have quite a few that are quite far away. FedEx earnings this morning, we've seen the stock down a little, up a little. This isn't anything that could trigger bullish or bearish anytime soon. We had a bearish trigger on this 3-7 cross earlier this week, but I decided not to play it because of earnings and the risk that earnings provides. It's, earnings is not a technical event. Earnings is a fundamental event. So gold, pulling on back a little bit here today, but nothing to where, getting any kind of trigger there. Even some of the gold miners here. We talked a lot about gold yesterday, so if you want my thoughts on that, you can check out yesterday's video. Halliburton, just like the rest of the energy names there. Now, Home Depot, this is one that has a little bit of a 3-7 cross on it today. It crossed down yesterday. It's crossing up here today. The consolidation risk component on it's pretty high right now. So I couldn't go after it. It kind of looks like Chipotle looked yesterday, where, it could go. But as it sits, it's just not quite there with Home Depot. But one that could trigger tomorrow on a little bit of a gap up, we could see. But as it sits, it's not. But one that could get there. Honeywell, we saw the 3-7 cross down this week, but didn't trigger, just kind of sitting there. Again, another one that needs a little bit of pullback. And a lot of these, right, from an IBM to a Honeywell, they need this kind of little bit of pullback before going to really come in and trigger. Stuff like Intel really just hasn't pulled back enough to be able to come in and trigger, and so just haven't had those opportunities. JD, same thing, wasn't able to pull back enough to ultimately be a trigger here today, though, well, it's not a trade for the faint of heart, but this is something we could see blitz up into the upper 30s rather quickly. And, if you have some stomach for a all or nothing type trade or something using 29 as a tight stop level, JD is a very interesting setup there. J&J, we've seen it pull back, but, nowhere close to a 3-7 crossover or to a trigger there with it. Juniper. This is one I talked about yesterday. I was kind of surprised we didn't see a downside signal come in on it, but the consolidation risk on it was just very high. And what do we see? We see a quick snapback here to it. Okay. JP Morgan, already talked about the banks with Bank of America, not really there yet. Coca-Cola, nowhere close. Las Vegas Sands, kind of similar action to Boeing, Apple, but isn't pushing above yesterday's high, but could trigger as soon as tomorrow. MGM, nowhere close. Triple M, nowhere close here with a potential trigger. Altria, neither. So, we still have quite a few on the board here that just aren't very close. But we do have a few more than what we had earlier this week, with some potential to come in, sooner than later here. Pepsi has a 3-7 crossover on it here today, and I thought, does this have a chance of triggering? And no. It wasn't. The consolidation risk on it just very high, even with the downside 3-7 crossover. It's kind of like Procter & Gamble. These are more indications of a short-term pullback, and for me to expect a move of two average true ranges to the downside, the odds just aren't in my favor there for that here with them. You see the SPY has a 3-7 downside crossover coming into it as well. So, the market, AT&T, there's just been nothing here for the last 3 weeks, from a trade signal standpoint. Target, we saw the downside 3-7 crossover yesterday. I was kind of curious. Thought, we didn't get an upside signal on this upside 3-7 crossover, so we didn't get a downside signal on the downside. Nah, we didn't. Didn't come in. Twilio, where I stand with Twilio. All right, go down, keep going. Just pull on back because what, that next 3-7 crossover, I want to be able to get in, but it's just not there yet. But doing kind of some normal, very normal action to ultimately get a trigger. Twitter just kind of sitting there all week, not really doing much. Here with Twitter, Under Armour's finally had a nice pullback here on it. This is something I'd love to be a buyer of. I'd love to be a buyer of the next 3-7 cross to the upside. If it triggers, we did have some pretty hefty volume on the sell this week, which it's not that unusual for it, especially with some of the good volumes we saw on the upside. But yes, could it be an upside trigger sometime soon? Sure. It could get a 3-7 crossover. Maybe Friday would probably be the earliest potential there. But you kind of see how a lot of these are. If we see the market and some of these stocks just kind of drift lower into the end of the month, which is typical, right? We tend to see a little more selling in the end of the month than the beginning of the month. And then, when we tend to see more buying at the beginning of a month. And if we start to see that, we can see a lot of these, get some nice upside triggers and a resumption of the trends that they are on. And let's face it, that's what gave us the shot on Under Armour right back here. The nice pullback, just very nice pullback. Got the downside 3-7 cross, came on down here around the 20, which is where a lot of things will trigger, and then got the update. And, okay, there's the trigger. There's our opportunity to go. It's just starting to come into a little bit of a phase like that. UPS, I was kind of surprised UPS didn't trigger to the downside when FedEx did, because they're kind of similar, right? They're very similar. A very, very bullish candle here for UPS here today. This is one on a 3-7 cross, could easily be an upside signal. I'm not very bullish on UPS, but I would definitely be willing to trade the upside signal for the challenge. Visa, come on. Pull on back, give us a pullback. You'll notice that, we got the nice pop and run here in Visa. And since then, the stock has pretty much been stuck here at 170. A little bit of blip up, a little bit of blip down. But, consolidation central here since we got out here with Visa. Valero, just kind of with a lot of these other energy names, kind of the same element. Vulcan, we've seen this cross over to the upside, to the downside, and it just hasn't triggered. Just hasn't triggered because of the consolidation risk, and it keeps on consolidating. Now, Verizon has a downside 3-7 crossover on it today. I thought for sure this would trigger, but the consolidation risk component is just very high on it. And so, not something, triggering here today. Could trigger to the upside on a 3-7 crossover, but, we'll see. It's still in this consolidation chop around 57.5, and, there's so far no indication that it is moving off of that. We have Walgreens. We saw a bullish signal come in yesterday. The bullish signal still plenty intact here, but earnings in the morning, so just not something I can even go really mess with here. Walmart, U.S. Steel, nowhere close. So we have a few that are getting close, a few that, could come in, but just nothing sitting there here just yet. And again, I'm not overly surprised. We talked about at the beginning of the week that this was a high probability, when we look at summertime in the market with the algorithm and kind of how it's performed over the well over 600 signals that we tested with. The summertime time period, it's a time period where signals can come in bunches and where we can go through some dry spells. And, we've had 2 signals this week, neither tradable, so it feels a little drier than what it really is. But we're definitely in that, in that dry spell. You'll notice here the kind of the chunk of trades that came in right here in this kind of, 2-week period. They came in very kind of quickly there in that 2-week period. And I expect that we will see something like that happen again sooner than later. But we'll be patient here until it does. But, Apple, Boeing setups, they're pretty interesting right here, to say to say the least here. Now, as far as the overall market, we're not seeing a major shift, a major change here. But when you look at the news dynamics that have come in over the last 48 hours, the market's reacting differently, right? The market this month, every time there's Fed speak, every time there's Fed something, the market's been going up. Yesterday, we saw that change. Fed spoke twice, market went down. That was a different reaction. We've also seen, hey, you know what? Promise of trade deal. We had that overnight by Stephen Mnuchin as he was overseas, and futures rallied, but they weren't able to hold the gain. That's just different price action than what we've been seeing. So, yeah, it's the same stuff in the news cycle. We're not seeing the news itself change, but the reaction to the news is changing, right? It is definitely changing and, is catalyzing some of this pullback. For me, it just kind of looks like end of month type of thing. I mean, we've had a big month. June has been a big month here for the market. And to see a little bit of, selling into the end of the month is simply, more normal than abnormal here. And so we'll see kind of how it goes. We're not seeing the market metrics change all that much. The bullish percent index, it's just, kind of sitting here, not really going anywhere. The ratios of sectors is actually a little bit stronger today than it was yesterday. But we're getting a little pop in transports here today. They're outperforming, with the red market. And that dynamic that I showed this morning of sectors, where, we just have this huge differential. It's only gotten worse. I mean, energy's only improved throughout the day, and real estate's gotten worse. I mean, the difference between the top sector up 1.84%, real estate down 2%, that's almost a 4% differential in the exact same market between sectors, and all these stocks are going into the reading of the S&P 500. Right, so it's a very differential market out there, and rightfully so. Right, rightfully so, and it's not going to go away. It's not going to, this isn't something that's just a phenomena that's here right now and is going to go away in the future. No, this is here. It's here to stay, and we will see it, continue to a very large degree in the weeks, months, and years ahead here in the market, as other asset classes, they've just been brushed aside. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.